Peter Cardillo, the Chief Market Economist at Spartan Capital Securities, is joining us. Great to have you with us again. Do tell us, just when we're talking about the possibility of finding a bottom to these markets, we seem to be slipping that much more. Peter, what are the cues really that the markets are likely to react to next? Because yes, the inflation worries are very strong. Recession worries are staring us in the face. What are the markets watching out for?
Well, look, to answer the first part of your question, if you look at what's happening today, is basically taking us back down to the low levels or near the low levels that we saw last Friday. And then, of course, when we closed above the 3850 on the S&P, we saw a substantial rally yesterday, only to be negated today. I still think, believe it or not, that we made a bottom here. And if we hold these levels that we just spoke about today, then I think, we'll see the market respond in a positive way. The market is very worried about inflation. It's very worried about recession. And speaking about recession, if you look at the macro data that we got out today, it certainly points to a big slowdown. And if you look at the new housing sale, that was a big disappointment. That tells me that the housing sector is probably already in recession. And if that's the case, then we're headed for recession. The question is will it be a severe recession, a mild recession? I think it'll probably be a mild recession.
All right.
And this.
No, so I mean, obviously these cues are very strong, but in a more current momentum that we are seeing the tech stocks fall, is that likely to continue? Because Snap is really making news with the statement it's made about the projections for the future not looking strong at all. Is that going to dampen sentiment for tech stocks further? Is the Nasdaq going to take a further hit?
I can say that Nasdaq is the sick man of Wall Street. Unfortunately, until we see some daylight there, it's going to cause pressure. Look, there comes a point in time when stocks just will stop going down only because of the fact that they've reached levels that will attract investors. The question is, have we reached those levels? Nasdaq seems to be saying no. But again, if you look at the valuations, and I'm not referring to stocks that have no value, have no PE at all, then that's a different story. But the stocks that have PEs, and you look at those valuations, some of these valuations have been cut in more than 50 and 60%. So there will be a point in time where even if the market worries about inflation or about a recession, that it will attract investors because a lot of stocks would then be selling under book value. And so I think, it's a hard question to answer, but I think the broader market has, again, I think it's reached bottom, but we'll just have to wait and see. I could be proven wrong, especially
the U.S. President Biden has spoken about easing tariff on Chinese goods, and that has spurred market sentiment at least a little bit at the top of the week. How likely is that those cuts likely to come through? Because we're talking at a time when Chinese GDP may take a substantial hit from most accounts. The U.S., like we mentioned, is staring at recession. So is that likely to happen? And if so, will the markets look at it favorably?
From an inflation perspective, it's probably a good idea. But from a political perspective, I think it's a bad idea. And that just, leaves us wide open to more maneuvering from the Chinese government. So I'm not sure whether or not, it'll happen. But I think politically, it's very risky.
We'll keep watching this space. Peter, it's always a pleasure talking to you, getting your perspective on Wall Street and the kind of cues that we're watching out for. Currently, there's a lot of pressure in these markets, and we'll have to see how we close the day and how the week is likely to pan out.